Greetings, members, one and all of the Salivation Nation. Is JP Morgan finally starting to crack down on manipulation? Let's explore. For those of you who don't know, I posted a video quite some time ago about some news that broke last year about some folks at JP Morgan, the top precious metals trader, being caught and prosecuted and charged with fraud, RICO, racketeering laws, that type of thing, with the top precious metal traders at JP Morgan. And so they've been kind of nervous, I would suspect, as of late. You may have seen my recent video about supposedly there's now a rumor going around that perhaps JP Morgan has been forced to liquidate some of their, or to back off of their silver positions. But nonetheless, regardless, I think that the people at JP Morgan are a little bit nervous right now. Now, most of you know my feelings on manipulation. My feelings on manipulation is that it does happen, and it happens with some frequency. It involves every trading market out there. There's no question. And I know there's a lot of particulars and ways that it can be hidden that kind of keep it from people from being prosecuted and kind of escape the hands of the law. But nonetheless, regardless, people that do that basically do it to perpetuate their self-interest. In other words, they can manipulate the price up or down. There's no big grand conspiracy in my mind of manipulation, but it does happen, and it's against the law. And apparently JP Morgan is nervous, according to this article from Bloomberg, which was shared with me by the great Chuck Caplata. Yes, indeed. Thank you, Chuck. And this is quite interesting indeed about a JP Morgan Treasury trading chief. Robert Allen has been placed on leave. So JP Morgan Chase and Company's head of U.S. Treasury trading, Robert Allen, has been placed on leave, according to a person with knowledge of the situation. The move was linked to the firm's decision to put some of his colleagues who focus on interest rates on leave earlier this year. Business Insider reported early Friday, citing unidentified people familiar with the matter. The bank is examining Allen's messages and whether he may have violated any company policies, the publication said. This is all internal that's going on here. An email sent to an address listed for Allen bounced back, and there was no answer on his mobile phone. Banks have been looking more closely at electronic messages on a variety of platforms in recent years, sometimes putting careers on hold as they try to ensure staff aren't engaging in misconduct or using unmonitored apps for business. Earlier this year, JP Morgan dismissed a credit trader who allegedly created a WhatsApp group and used it to discuss market chatter with colleagues, people with knowledge of the matter said at the time. So that's very fascinating indeed, what's been going on there behind the scenes. And like I said, there's a lot of stuff happening for sure. And I think that JP Morgan is probably nervous, considering that the feds, the Department of Justice, are certainly keeping an eye on them. And so more or less it's kind of forcing them to kind of be ethical in some ways there in terms of some of its employees and even top-level employees such as the Treasury trading chief. And nonetheless, there it is, silver. And other precious metals as well are certainly manipulated like any other market out there. And this is something that has been going on for quite some time. And I think it will continue in some fashion, way or another. And this is why, I always encourage people to hold the physical for sure, just in case, there's a time, because manipulation is really going to matter when it's manipulated up or down. If you need to sell or buy, it affects us all. But more than likely, it's a short-term effect, and the long-term prospect for precious metals is largely derived from natural market forces, indeed. And so that's why silver, this precious metal here, is the one that most people accused of manipulation because, well, it's so low right now in comparison to gold. The gold to silver ratio is extremely high right now, in the high 90s, and it will continue probably to hover in that area for some time. There's nothing that I see that will bring it down low anytime soon. However, it could come down lower. And then what will people say about manipulation? In fact, here's an article from Yahoo Finance through FX Empire that talks about this a little bit more. Assertions are made that the manipulation takes place in a shroud of secrecy, and the unexpected lower prices of gold or prices that don't meet wildly bullish expectations are cited as evidence of a conspiratorial activity. The claim is made that the price of gold, or insert silver here, would be much higher if this manipulative trading activity were exposed, acknowledged, and prohibited. But, I don't like to use buts, we'll use a however here, unless it's a ghetto booty, then I'm fine with it. All markets are manipulated. I don't disagree that there are forces at work in the gold market that can be disruptive, and may even be described as manipulative. However, the same is true of all financial markets, stocks, bonds, commodities, etc., and I agree with that wholeheartedly. It is worth pointing out that gold and silver bulls are one-sided in their arguments against manipulation and its presumed effects on prices. When prices don't meet expectations on the high side, or an expected or unexpected drop in price occurs, finger pointing at shadow figures is heightened. Long-side investors in all assets, including precious metals, benefited from the manipulative efforts of the Federal Reserve 12 years ago, and again just recently. Now that is really where the manipulation is occurring, because it directly affects the value of the dollar. And they have admitted they want to try to turn the economy around by what they think should happen, which is typically liquidity into the markets. The recent recovery in prices for stocks, bonds, oil, gold, and silver has been almost unbelievable. It is literally jaw-dropping, but nobody is complaining. Nobody cries foul when the markets are manipulated for the purpose of driving prices higher. Only a couple years ago, JP Morgan Chase's accumulation of silver was assumed to be bullish for silver prices. On the other hand, they have also been subject to scrutiny about price manipulation. Would silver bulls care about price manipulation if prices went up? No, they wouldn't, as you heard me talk about. It happens both ways. Manipulation occurs both ways. It acts in their self-interest. And so this goes on to talk about how when prices of most assets dropped sharply in 2008, the Federal Reserve stepped in with both guns blazing and pledged incalculable amounts of money and credit creation. Their efforts led eventually to significant increases in previously beaten down stocks and bonds. The benefits to gold were most immediate and more spectacular. Nobody complained. So first, the Fed's actions were expected to cause a surge in the effects of the inflation that had been just created. Some experts predicted runaway inflation. The condition referred to as runaway inflation is a reflection of an accelerated drop in the purchasing power of the currency in use bordering on repudiation. In this case, negative sentiment for the U.S. dollar increased, and its weakness was reflected in higher prices for gold. However, the expected huge increase in prices for most goods and services did not occur. With the realization that runaway inflation wasn't on the front burner, and that U.S. dollar weakness had run its course, at least temporarily so, the gold price fell. Gold had already increased fourfold between 2001 and 2008, with the credit collapse threatened the integrity of the financial system. Prices of financial assets, including gold, fell sharply. During the period of approximately 6 months, from spring to fall 2008, the price of gold declined by more than 30%. After that, it was off to the races again. Then it talks about here for the next 3 years, the price of gold climbed 170%, reaching $18.95 per ounce in August of 2011. I think that's adjusted. I think it did go over 1900. All assets benefited from Fed's hugely inflationary, gift-giving propensity, but none more so than gold. After the realization that 2 plus 2 does not equal 10, the gold price declined to more reasonable levels. This decline occurred against the backdrop of a continually strengthening U.S. dollar. After the gold price declined, claims about manipulation and price suppression began anew and continue. The recent long bounce of gold price has again sparked dreams of wealth coming from expected higher gold prices. As someone accepts price suppression of gold as factual and evidential, then they must also recognize that no institution has done more to pave the road to higher gold prices than the Federal Reserve. That's right. And the previous statement is by no means laudatory of the Fed. The Federal Reserve has destroyed the U.S. dollar over the past century by continually expanding the supply of money and credit. The debasement of the U.S. dollar has led to a decline of more than 98% of its purchasing power, and that decline in purchasing power is a reason for gold's high price over time, from $20 per ounce to $1,700 per ounce. Some gold investors are way too price conscious. Nay, price dependent is more accurately descriptive term. They seem to be consistently in need of higher prices to justify their predictions for gold. The purpose of the article is to point out how each time price expectations aren't met, the price predictors trot to the price suppression argument. If they understood and accepted the argument for everything it implies, then they would already own physical gold and they wouldn't have to defend their errant price predictions. That's right. The case of gold is not about price, it's about value. You've heard me talk about that time and time again here. You know, we do get hung up on price a lot too. That's why I'm a hold for the long term, both for gold and silver too. Silver is something too. We should not be hung up on price. We should understand its value, which transcends price. Obviously price is important because that's the money you're going to get paid when you go to sell it, which is another reason why I'm saying to hold it, when you can maximize what you're going to get out of it. Gold value is in its use as money, and its value is constant and stable. That's right. So it's still seen as money between central banks. Central banks are accumulating. That's something that we can't really say the same for silver, but nonetheless, silver is hibernating money, I believe. Gold is the original measure of value for all other goods and services. Gold's price tells us nothing about gold. It tells us what is happening to the U.S. dollar, nothing else. And that's exactly right. That is so true. It doesn't tell us anything about gold. It's about the dollar. But also, it does give us some indication of value, whether people want it or not. And people tend to want it when the price is higher, less so when the price is lower. So there is some little bit of a sort of a contrarian view to that. Nonetheless, we have it that we hold the precious metal, and I think that we can't necessarily bank on manipulation, pun intended there, as to where silver is going to break out in due course. But the less that it occurs, I think we'll see a more true outline of where the price is. I don't think you'll see much change in the markets, just the timing of some of the stuff. But nonetheless, you can have a movement in the market one day to the next, and it can be completely transparent as to the trade, and you may not even know it, whether there's manipulation going on or not. That's my feelings on it. Silver. It is the most controversial of the precious metals, I believe, right now because of its standing and how it's being viewed. And I've seen a change in this community as well in regards to that. But make no mistake, gold is manipulated as well, and I believe even to some extent platinum. You can probably make a better case for manipulation for platinum, considering how low it is and how rare it is compared to gold. However, even as such, I believe that it is seen much more as a commodity, as an industrialized metal than anything else. So it makes sense in that regard as to why it's lower. But nonetheless, silver is the metal that we watch and that we want to see. Many of us would like to see it perform better than it has been in recent years. And so we'll see how it plays out. But nonetheless, very, very interesting article here shared with me by Chuck and Plata. And I want to thank you again, sir, for sending this to me. Fascinating indeed. And while you're here, if you don't mind, if it's not too much effort, maybe you could drink an energy drink before you do it, is to move your hand upwards to the mouse to where that little gray thumb button is, and it'll turn blue. That's right, it turns blue. I was informed of that by John W. It turns blue. That's right, for thumbs up. Yes, that does help the get the word out on the video for the algorithms. I really appreciate that. And a multitude of gratitude to you all for taking the time to watch this video. What are your thoughts? Do you think this is a sign of things to come with JP Morgan? Kind of cracking down on their own here? Or do you think it's just more of the same? Is this posturing? We'll see how it plays out. Let me know your thoughts below. I know many of you disagree with me on the manipulation thing, and that's okay. We all hold different opinions here, but nonetheless, there it is. And I'd like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.